Hello and welcome to my latest weekly video news from Madison's. Well, mortgage approvals, they're a real acid test of how the market is feeling at the moment. And of course, in March of this year, at the end of the month, stamp duty rates were declining. And so there was a huge surge of activity of people trying to get their mortgages approved. And then this month, last month of April, a month before now, we're in June, aren't we? How did that happen? A £739 million drop on the month before. So a huge decline. A very factual reason, though, why. Clearly, a lot of people rushing to get those higher stamp duty reliefs, but their purchase property happened during that time. So quite natural, but its lowest level since January 2024. And of course, we will wait to see what happens. Bank of England meeting in a couple of weeks' time, 19th of June. Then next together, base rate is currently at 4.25, inflation being a bit stubborn at 3.5%. So we'll wait to see if they do drop it. Of course, we thought there would be some drops with all the debacle going on across the Atlantic and the word recession being mooted. Bank of England hate to hear that. They want the economy to grow. GDP is always a great sign of how the economy is faring and how people are feeling. So, they're very nervous of a recession, but equally trying to battle that inflation rate, which remains stubbornly high. Is expensive out there now, isn't it? I find that whenever I go out for a meal or something, how expensive that now feels. So I think we're all feeling that inflation pinch, but I think we're all still carrying on a bit. And that's what the Bank of England is having their problems with. So we'll wait and see what happens come mid-June. And great news for lenders in that the stress testing that the Financial Conduct Authority, the FCA, have said that they can relax their individual stress testing. So borrowers should be able to borrow a bit more. What they're basically saying is they want banks to assess their own risk a bit more. So this was all introduced in 2014. It was basically as a result of the 2008 crash, whereby lenders had pretty much been allowed to do whatever they want. And as we saw with the likes of Northern Rock, etc., the bank then had to bail those lending positions out when those bad debts went bad. So they introduced this stress testing, which was also basically as a result of that financial crash. Interest rates dropped to a phenomenally low rate, obviously sub 1%, I think 0.25% basic rate got to at one point. And they needed to be sure that lenders were able to assess borrowers' affordability when rates rose, because clearly that was what was called a zombie rate. It's not real, it wasn't sustainable, it was just a reaction to the 2008 crash. So lenders had to basically stress test all debts to show that if interest rates reached a different level, a more acceptable level, say 5, 6, 7, 8%, then those borrowers would be able to afford their commitments. And it's because of that stress testing that there hasn't been the dreadful crash in prices that the media was predicting for quite a while, saying that all those fixed rates were going to be coming to an end on very competitive deals, and that would result in quite a high number of repossessions. It didn't, because those borrowers had been stress tested at a higher level. They could afford their new mortgage commitments, just a bit more expensive and less disposable income, which of course is never nice. The FCA has now said that banks can reduce that. They feel that first-time buyers should be able to get on the ladder with a smaller deposit, and that should become more the norm, and that they should be able to borrow more, because generally first-time buyers have excellent wage growth. They are moving through their career up the ladder, and while their mortgage payment will stay like this, their salary will go like this. And of course, when they then move, it jumps up, but their salary keeps going. So first-time buyers certainly being told you could borrow a bit more money down to individual banks' guidelines. So that's quite good news, I would say. The market at the moment, just to sum up on that, how is it feeling? It's a number one question I get when I'm out and about. How's the market? It is phenomenally busy, manically busy. And people always say to me, well, that's a good thing, isn't it? But it's not always good busy in my industry. And Zoopla's latest house price index substantiates exactly that. So basically, it has been phenomenally busy. You have a lot of properties going to market, a lot of valuations happening, people wanting to get moving and then committing to that, which is great. But stock levels in the south are up about 20% on what they would normally be at this level, which means that agents are having to nurture, support, deal with a lot of live properties. When properties are live, they're most demanding for an agent. You've got the phone ringing, viewing requests going in, feedback to gather, review calls to have, new photography to arrange. social media campaigns, featured listing, Rightmove, so much going on, changing the window cards. It's phenomenally busy when a property is available, and at the moment we have a lot of available properties. We've got a good number of under offer as well. We're actually one of the highest in the town for our sales agreed, so that's great. But yeah, more stock, and that takes a lot of energy. But evidently, Liverpool is where agents are most busy. So the average agent, i.e. not a estate agency branch, but a estate agent person, has 36 live properties at the moment in Liverpool. I won't tell you how many I've got. It's a lot more than that. Brighton is the biggest in the south, or the busiest in the south. They should come to my office. Anyway, so after this video, I'm actually about to record a little video for all my available properties, just to give them a bit of a summary of what the market's up to. And we supplement that in their regular review program. So they speak to me probably every 2 to 3 to 4 weeks, depending on how much energy and motivation they have to get sold. And then we do a monthly report summary as well of everything that's going on. And then I record a little vlog as well, which I'm about to do. So yeah, if you ever want to see that, which is much more about what's going on in Tunbridge Wells town itself, drop me a line and I will happily share it with you. Anyway, I hope you have a great week. Oh, before I go, some fabulous properties that we've taken to market too in Bayham Abbey, the Bell House, which is just exceptional. Amazing value for money, almost 5,000 square feet of accommodation at 1.295 million. Stunning property. And Forge Cottage just round the corner. Really fabulous open plan kitchen on offers in excess of £1 million, and with a beautiful, beautiful garden. So two lovely properties in the Bayham Abbey that to enjoy this glorious summer weather that we're starting to enjoy. The driveway to Bayham Abbey is a mile long through gorgeous countryside. It's worth going just to see that. Hope you have a great week. I look forward to seeing you next week. Bye-bye.